Good morning, good afternoon, good evening, everyone. My name is Tim Ogden. I'm the Managing Director of the Financial Access Initiative, a research center housed at NYU Wagner, focused on how financial services can better meet the needs and improve the lives of poor households around the world. This is the faiVLive. If you don't know, the faiVLive is an outgrowth of our weekly newsletter, The Five. You can pronounce it The Five or The Fave, that's on purpose. But let's face it, the faiVLive sounds a lot better than faiVLive. So this is the faiVLive. If you like what you hear and see today, you should subscribe to the Five, and you can see a link to do so here. I note that we've collected resources, including the bios of our panelists today, as well as a bunch of other resources, recent research and reports on the topic that we'll be covering that you can find at financialaccess.org. The faiVLive is part of our Household Financial Security Insight community, which is supported by the MasterCard Impact Fund and in collaboration with the MasterCard Center for Inclusive Growth. The best way to keep up with that is to subscribe to the Five and follow financialaccess.org. And through the Insight community, our goal is just to advance financial inclusion and thinking on financial inclusion as we seek to close those remaining gaps in financial inclusion around the world. Our topic today is digital financial services, inclusion, exclusion, and the future of pro-poor financial services. I'm joined by an all-star team who spends a lot of time thinking about those issues. Tamara Cook, the CEO of FSP Kenya, Salah Goss, the Senior Vice President for Government and Development at MasterCard, Moonmoon Shehrin, Digital Customer Manager of Microfinance from BRAC, Chen, Lead Financial Sector Specialist at CGAP, and Wright, the Group Managing Director at MSC. A quick note about our format. This isn't one of those webinars where we're going to have just a series of presentations by our panelists. This is a conversation. It's going to be wide-ranging, and I'm not sure where we're going to end up. I'm pretty sure it's going to be interesting, given the people we have here. Please do use the Q&A function to ask questions. I'll be monitoring those during the conversation. And also, please feel free to use the chat to suggest additional resources that you know of or ideas that people may find helpful. Now, to kick us off, I'm going to reveal some of my biases and tell you that I spent the first 10 years of my career in the technology sector and analyzing the technology sector, and saw a whole lot of what happened during the dot-com revolution and a lot of hype and a lot of disappointment. And I remember when I came into this space, it was right after I'd started as director at FAI, the Better Than Cash Alliance was launching, and there was an event for it in New York. And I went to the event, but was out of value on my Metro card, which you use to use the subways in New York City. I didn't have enough for a ride, so I had to buy a new card and put money on it. And then I went to the attendant to have those two cards combined. And what that attendant managed to do instead was delete the value off of both cards. And the process for me having that money refunded didn't involve that agent doing anything. It involved the next day taking a 30-minute subway ride to the administrative offices of the subway system and waiting for an hour to talk to an agent there to explain to them what had happened so they could then do research and then mail me a card fixing the problem 3 weeks later. And I just found it incredibly ironic, this idea, the Better Than Cash Alliance. And I had the ability, it didn't matter to me that I'd lost $50 of value for 3 weeks and I had the time to go and fix it. But recognizing that so much of what we do around digital starts from an idea of how it could work, not an idea of how it does work, and particularly how it does work for the people who aren't wealthy, who aren't the preferred customers of providers, who aren't experienced, who aren't willing to go show up at an office and demand redress. And so, my whole thinking around digital financial services has been shaped by those experiences and concern about what the digital transition means, not just from a theoretical, what it could do for inclusion, but in practice, how it can entrench exclusion. And so that's the general frame that I come at these things with. But I want to say that I'm not just entirely a curmudgeon. And so I want to start us off by talking about some of the good news that we've seen already this year from digital financial services and what it's enabled to happen in response to the pandemic. So Graham, I was just going to ask you quickly, MSC recently hosted a webinar about the Indian experience. And I was hoping you could just kick us off with a few words about what India has accomplished because of its investment in DFS infrastructure.
Sure, thanks very much, Tim, and great story to introduce, and actually tremendous lessons from that story in of itself, which I will echo in the context of India. So, I mean, India was out of the blocks really quickly, was able to, it went down into lockdown on the 24th of March, and the first installment of, emergency cash payments to women-headed households, or to households but paying into the women's accounts, went out about 3 weeks later or 2 weeks later in April. Since then, a variety of payments have been made, a regular monthly credit into the accounts of the poorest who have these PMJDY, the financial inclusion accounts, payments into the accounts of farmers under the PM Kisan program, and also advance payments for the Udwala liquid petroleum gas initiative to convert poor households away from wood stoves onto LPG stoves. Just to give you a sort of sense of the sheer size of that, you're talking about $8.73 billion having been moved and paid into these accounts. I'll repeat that because it is mind-boggling. $8.73 billion, and that has been sent into accounts of about 428 million people. Now, this has not been without. So while India was leveraging its remarkable payments and digital payments infrastructure and the national biometric ID system and so on, it's not been without its problems. And depending on the different schemes, we have between about 2/3 and 3/4 of people who have received those benefits, and others who haven't, who report having, not having received the benefits in a survey that we recently conducted. Now, why have they not received their benefits? Some of them, it's because of challenges with the Aadhaar-enabled payment system, the most simple system that allows beneficiaries to go to agents, get the agents' help in order to get their cash out. Particularly off-us transactions on that platform have been a bit problematic. But I think the biggest problem has probably been, and again, we're diving deeper in doing some qualitative research to look at this, but the biggest problem has been communication. People don't know when these payments come into their accounts. They're unaware of them actually having been credited, and therefore they don't think they've received them, or don't even know on occasions that they're eligible for them. And this is something that we have seen time and time again with G2P, government to people payments, is that communications around eligibility, timing of, enrollment, timing of disbursement, and grievance redress are all very, very often suboptimal and the biggest impediment to successful programs. Out, over and out.
Yeah, thanks for that, Graham. Moonmoon, BRAC has done something similar, if not in scale, but reacted very quickly in Bangladesh to try digital cash transfers. there's a report on that linked on financialaccess.org for people who are unfamiliar with that. But Moonmoon, would you tell us a little bit about BRAC's experience in trying to distribute cash aid through the mobile money system in Bangladesh?
Right, of course. So there were, what we did in the beginning of the pandemic, we made sure that we can transfer cash and savings refund to our clients and our beneficiaries. And so in that process, there were 4 lessons that we learned from it. So one was, since we had the digital platform, it was very easy for us to make the cash transfers to the digital wallets of the clients very quickly. And we had to make sure that we had to maintain the social distance, as well as we had to reach clients fast. So going for the traditional system of distributing cash was quite difficult. So this really worked for us well. We could easily reach clients fast. The second one that we found was the mindset of our clients as well as our staff in adapting technology. So at first they were very reluctant. They didn't want to do the cash transfer through the digital wallets. But right after this first wave, when they saw that all our clients received the payments in their digital wallets, that's from the second wave onwards, it became really easy for us to do it. The third lesson that we learned was many of our clients, they own a phone, but they do not own a digital wallet, like at least the bKash wallet where we were transferring. So what we did was we took their family member's digital wallet number, or in the beginning, they gave their neighbor's number, which we tried to exclude later on because of security, digital security. And the last one that was the communication. I think that was very important because we had to maintain a relationship with your clients, as well as we had to inform them about how to operate the digital platform, then agent information, cash in, cash out, how to open wallets, and then also awareing them about the fraudulent activities. So in the pandemic, so far, we have dispersed to 550,000 clients through the digital wallets. Thanks, Tim.
Greg.
Hi, this is Salah.
Yes, Salah.
I think we were encouraged to jump in, so I hope that's still okay.
Absolutely.
I just wanted to comment on your story before we moved on, because it's such an instructive one. And I've had that as a recovering New Yorker, former New Yorker, I've had that experience too, probably even more harrowing one. But I think it's great to start the conversation because I think it points out how, if done perhaps well, technology could be, or maybe even should be, a very human endeavor. And I think there are some lessons learned in that example and also in the work that we've been doing at MasterCard, and I'm sure around the industry, thinking about the intersection of technology, inclusion, and especially the last mile, or what we call the first mile, like being in the community. And I just wanted to quickly point out maybe 4 things, if I could, and the way we kind of would mitigate this or approach technology. I think the first one is really being concrete and researching already embedded trusted networks. Everybody has a financial life that they express, whether they're doing it in cash or analog, maybe it's not digital, but there are touch points that communities have where they're transacting money, transacting data. So understanding that and mimicking that as you think about deploying technology, I think is the first thing that's become very critical. So we have something we developed called ecosystem and value system mapping, which does exactly what it sounds like. I think the second one, relatedly, is have infrastructure that's fit for the environment. So, you know, there's some communities that don't have connectivity. So building the ability of offline, online, or if you know you don't have a robust agent network, how are you going to get over those things? So kind of the reality of the networks that people find themselves in. And then I think you hit on one in your lead up, is don't deepen exclusion. So we know that mobile phones are powerful. We also know that there's a difference in ownership between men and women. Access to a SIM card is different than access to a phone, and surely different than access to a smartphone. Mm-hmm. Also, think about the need to buy data bundles and what that costs. And so I just wanted to mention those kind of 3 things to build, and maybe just emphasize, you really the more you understand how someone is living their life today, the more technology should be able to complement that and make sure you bring in the providers and the networks that people are already touching to hopefully not have more stories like yours in the subway card.
And as you know, Salah, it was actually relatively easy for me to resolve, and I'm sure many people have had many more harrowing experiences because I have the confidence to know that if I go up and challenge someone, I'm going to be listened to and expect that I'm going to win in that argument. And for most of the people that we care about, that's not the case. They don't have experience dealing with a provider who's actually on their side. They don't expect to deal with an institution that believes them and trusts them. Greg, you have sort of this global perspective. I know your focus is mostly on South Asia, but I know you sort of take a look at this as sort of the bigger picture. And one of the things that that's embedded in Graham's story is India had done all of this work on identity and is way ahead, really, of most of the rest of the world on identity. And that's a big part of the infrastructure for digital is, can you know who you're dealing with? Mm-hmm. What is your sense of sort of the global infrastructure that we have in place for DFS to start reaching, these, like in Graham's case, the 470 million people in India, and how big is the challenge ahead of us in building out that infrastructure?
Yeah, well, certainly India is sort of hugely instructive for many good reasons, but also the reasons of places where they're struggling. Maybe quickly to maybe one other piece of good news just to quickly comment on, and it relates to the questions that you're raising, which is a lot of microfinance institutions are looking to recover amid the crisis by actually collecting back some of their loans digitally. And those places that are better positioned are frankly going to perhaps have a safer and quicker recovery on the microfinance side. And I know we'll come to the microfinance stuff a bit later. Maybe I'll share a bit of bad news, if only to highlight some of the good news. So I'm not going to name the country, but a certain country in the Middle East where we're working, we've been trying to get them to invest in these kinds of pieces of infrastructure. And they've evaluated now their response, both on the microfinance side and now on the COVID response. And they've ended up with delivering cash via the army. So I'm really wondering how much of that is going to make it and what that customer experience is like. And if you can imagine having no recourse in your case, Tim, you can imagine a poor recipient having an army truck show up and figuring out what that customer relationship is like. So bear in mind what we're comparing digital to in many cases. It's often the money doesn't reach. The money is, you have to pay a bribe or you have to pay some political favor in order to get your money. And so there's lots of work to do on DFS, but bearing in mind the baseline that we're starting. And let me just mention, it's not just India. So Pakistan has a national ID. So in the response to COVID, I just quickly saw these numbers. 46 million people applied for the digital transfer, of which 7.5 million were deemed eligible, families. And they've already received their money. And part of the digital IE infrastructure was enabled them to target properly, weed out those who were truly not eligible. And it wasn't perfect, but that money has made it to poor people. And I can't say that about some of the other countries that haven't invested in that. Let me also mention very quickly Peru, where there was a lot of unclaimed payments. People didn't even know they got payments. They've improved on the ID system now. That number of unclaimed payments has dropped by half as a result of recent investments in some of the DFS and also how you notify people. I can mention Zambia, where an old cash delivery system was rife with holes, and they've now been able to shift over to a system delivered digitally, far from perfect, but both the donors and the governments and apparently the recipients are a bit happier with the new system. So let me leave it there on the good news.
Yeah, and
Greg, I'm curious, how did they determine in Pakistan whether people qualified or not? What was the data they were using to verify that?
Well, the original program, they actually used a PPI, sort of a poverty scorecard. There was a series, so there's a program targeted at women, but they were actually able to use the ID and actually check it against tax records. Have you flown a flight? Do you own a car? You know, you can start to weed people out through the national ID by matching up against different databases. And, you know, if you're already you're already paying taxes, or you're flying planes, you're taking flights, you're probably not in the targeted category. So there's an ability to weed through things with the ID that way.
A couple of quick notes there, Greg. Thank you for that. And thanks for the follow-up question, Tamara. One is there's a great paper by Karthik Muralidharan and Paul Niehaus looking at leakage from Aadhaar and sort of recognizing that there are a lot of problems, but massive savings in reducing money that was misdiverted through the old system. And so that's, if folks are interested in that, I would encourage them to look at that paper. Second, we are hopefully working with Leora Clapper at the World Bank and Mohammed Mekki at Oxford to follow up on those Pakistan payments and better understand exactly who they're getting to and how they're being used, not in any way to sort of contradict what you just said, Greg, but it is a fascinating what Pakistan managed to accomplish there. And understanding, you know, some of these things we started talking about, which is we do know in Pakistan there is this women don't feel confident going to get the money, and so they send a male household member to get the money, and then, you know, what happens in those interactions, and are there agents that they trust, and, you know, the relationship between female customers and male agents is a problem or a challenge in a lot of places. Yeah, Tamara,
let me jump in here if
yes,
I may,
please.
also, and just say Tamara's question is really important, because in every country we're working in, whether it's Bangladesh or Indonesia, Kenya, Uganda, India, the biggest problem in some respects is not the people that are on the existing database of poor people, you know, with some degree of you know, need and some degree of support program. It's the new, what the Bangladeshis are calling the new poor. It's the newly impoverished people who have been, whose livelihoods have been taken away by the pandemic and are now in really dire straits.
Well, I mean, yeah, Graham, that's sort of the direction I was going and talking. I was going to ask Tamara, because, you know, Kenya is another place where digital has infiltrated. That sounds like needlessly pejorative, but, you know, it's reached farther than in most other countries in the world. But there are still plenty of people who aren't digital. You know, with a shout out to most of what I know here is from My Oral Village and the BOMA project and some organizations like that I know that you work with at FSD Kenya. You know, Tamara, what do we know in a place like Kenya that has been so successful, who's still not digital, and what do we need to be concerned about on how we approach those people who are not yet digital?
Yeah, no, I think in Kenya, we are kind of further along the possibility frontier, as you would say, in implementing something like this. But there are still a lot of people who cannot receive transfers, including youth who technically do not qualify for an account, and yet are often heads of households and are incredibly poor. You know, I often joke with my friends at Safaricom that my 16-year-old son shows up as something older than that woman because he's registered under my name. And that's often the case. And so even though Kenya does have a national ID system and you can KYC a SIM card with who it was registered by, that doesn't mean that's the person who holds it. Often SIM cards get passed around from person to person. And I'd like to refer to what Graham was saying, and it was really what was behind my question to Greg. There in Kenya, we have a social protection payment system. People have been identified through a very lengthy process, actually, of who is poor and who qualified, and they get regular payments sometimes. But right now, as the conversation was who needs the new money and how do we find them? Mm-hmm. One of the early conversations was, hey, most people have a phone. Most people actually in Kenya have mobile money. Could we use this data to help us figure out who's poor? And for a variety of reasons, that actually wasn't possible. And one of the reasons was around the data protection. So there was some analysis done, like here are the geographic areas that are the most poor. If you could just link who's got SIMs in those communities and maybe do some other cross checks. But because of our data protection Act that was passed, there was a discomfort that maybe that wasn't allowed, that was somehow breaking the principles of that data protection. And so I think it's really a complicated thing. And so right now it's being done, private players are doing this through community-based organizations who are in the communities and can identify and verify people who are poor and really need this money. And the government has used its network of kind of all the way down to the, you know, the lowest municipal people to identify that. But what we're hearing is that over and over people are saying, but their cousin got it, their sister got it, their friend got it, and it's not necessarily being targeted. And so it's just not a very transparent way of doing it. The other thing I would say, you know, you use the word infiltrated. I think one of the reasons that especially mobile money has grown in Kenya is because Kenyans use it for each other. We send money to each other all the time, right? And it was because it was so useful. And part of that is the social protection. And so people send money to each other to help them out when they're having a hard time. And what we've seen with COVID is because everybody's incomes have gone down and so many people have lost jobs, the families who rely on that regular income coming from their social network, which is not a social protection payment from the government, but from their network, those aren't coming anymore. And so the incidence of people going hungry and all of that is increasing, even for those who are digital and do have access to this. Right. And then those who are not digital, the only way cash transfers are being sent is through the phone. And just early on, there was problems with food transfers. There was like, oh, let's just put food out there. And then we saw unfortunate incidences of people fighting for the food. And obviously you don't want people congregating in one place when you're in a pandemic situation. So that was a cough. Nice.
On cue. I want to turn us to, you know, talking to some of these issues about identity and privacy. But before we get there, Moonmoon, there's a question from the Q&A here, sort of back to sort of your original story is, you know, could you tell us a little bit more about how you were able to reach people? You know, what were the best channels of communication to reach out to people and explain to them this, you know, this is how we're going to do it, this is how it works. And presumably questions like, and don't give your pen to other people. You know, how did you provide that initial wave of communication for people who weren't yet using Bcash on getting through it?
So what we did was, as I said, the main part of the entire thing was communication. Our field officers, they constantly kept in touch with the clients and telling them that, okay, so you need to, in able to get the cash transfer, you need to have a Bcash account, and then helping them navigate through that. But as you said, that these things are very important, as she has also mentioned, the privacy issue. So what we did was our field officer continuously spoke to our clients and letting them know that they shouldn't be sharing any of this sort of information like their PIN or anything else with others. So the one thing that there are 3-4 things what we keep on doing. That is, one is working with Bcash. They do not make any outbound calls, but a lot of our clients, they receive calls saying that, okay, I'm calling from Bcash. Can you share this particular information in order to receive the payment? But since they do not make any outbound calls, it's a trap, right? So we have to tell our clients that you have to make sure you do not answer to these calls. And then secondly, also getting calls from saying, you know, once the fraudsters, they see that Bragg clients are receiving a lot of payments, they tend to call and say, okay, I'm calling from Bragg. You need to share this certain information in order to receive this, right? And then even there, we tell them that, okay, you know your field officer's number, you know your branch manager's number. So if they call, they are going to call from that number. And if you get such calls that it's a Bragg staff calling and you have to share certain information, then you have to revert back to the officer and ask them that, do you want us to share this information? So in that way, we could actually stop a lot of fraudulent activities. And also continuously, we're giving out SMS voice calls to our clients related to this fraudulent activities. And also telling them that, okay, if you go for agent interaction, you're not supposed to share your PIN. You do not need to do that while you're cashing it out. And Bcash is also putting out ads on social media, radio channels, TV channels. So I think the key is communicating and reinforcing clients continuously about these fraudulent activities. That's how we can stop them from all these being victims of fraud.
Salah, let me turn to you here because, MasterCard has, is one of these organizations that has decades of experience thinking about privacy and fraud and protecting people. The whole business is built on people believing that their transactions aren't being exposed, that their credit card can't be used by other people. How are you thinking about this new world where there are so many people who just might not understand how easy it is to steal from someone through a digital channel if you don't, protect some basic information?
Yeah, it's a good question because I think even those institutions that have had decades, as you put it, doing this, it's an ever-changing landscape, regulatory landscape, and also as we learn more and as technology evolves. So new laws like GDPR and some other policies, even some that are in Europe, but then are making their way to Africa, are really forcing us to look again, which is a good thing, at how we're protecting data. And then, that's different, could be different jurisdictionally. But I think there's some principles that still hold. So what we follow is data privacy by design. And what that means is designing into the products certain things that protect not only the end user, but also, I think critically important, give providers the tools that they need to either pass on information or to protect the end user as well. So for example, having permissioned use cases. So when you sign up for something, it's very clear what you're signing up for. If there are additional services we can bring to you, because of the proposition for the team that I work on under the strategy called Community Pass, is really an aggregation of services. Because we know that cuts down acquisition costs and servicing costs. But even for those follow-on services, getting your permission again and being very clear what data we're using. So then you can imagine, because what we're talking about, that can be hard. There's some terms and conditions I don't read, I don't understand. So there has been a tremendous amount of work to make it fit for the end consumer. And so that's been a partnership between legal, compliance, the privacy team. And basically, some things that we've learned could be obvious: keep it short and simple. But then also using visual aids has been very helpful. And so there's instances where logging on to a product, you will see a screen that takes you through kind of these disclosures, gives some visual aids. But we also know that people who aren't used to digital, or, we talked about, it could be a family member using it, not them. We also have gone this step further to make sure that our channel partners, so the banks that use our solutions, the microfinance institutions, savings groups, farmers groups, schools, that they have something that is very easy to read in local language with a lot of visuals. And then we do training over and over and over again. So I think the lesson is really putting it in language people can understand, one. Two, making sure people have as much control of their data as possible. And three, really targeting the ecosystem. It's not just the person who's using the solution, but the school who is communicating with the parent who has a child who might, bring a leaflet home. So we've really tried to take a holistic approach and making sure that everyone is informed and aware.
So, digging in there, right,
Yeah.
there is tension on the privacy question specifically. And, this has come up, one of the commenters mentioned it, and Tamara, you mentioned it with the data privacy protection law. Like, this is not an easy thing to figure out, right? Privacy is important, but access to the data so we can identify who actually qualifies for the programs. And Greg, I'm probably not the only person who thought, wow, if the Pakistani government can link up people to whether they've taken a flight, they could probably link up people to other things and do some things that maybe it's great that they use this for targeting for the poor, but that may not be the only thing they actually do with that data. I'm going to sort of open the floor here, starting with you, Graham. How do you think about what is an appropriate level of privacy that meets the needs of regulation, our ability to target people, but also doesn't allow sort of nefarious actions?
Well, so a couple of responses to that. It seems to me the first is to let's be very clear. When you talk to poor people, they do care about privacy. It matters to them, and too often, maybe only a couple of years ago, the excuse was, "Oh, they don't care, they don't mind. We can do what we want." That is palpably not true. I think the second point that I would make is that all of us have surrendered our privacy to big corporates. And so we need to think a little bit carefully before we start pointing the finger. You know, I'm not on Facebook particularly, but I mean, you know, Google and the like all know way too much about me, despite me hiding behind VPNs and all sorts. So, you know, I don't think that this is solely an issue of government. I think it's a much, much broader issue. And I actually worry more about the corporates in the context of, you know, the mass market of the poor than I do about governments, because, you know, governments will go after agitators. I buy that, and that makes sense. But corporates will go after the vulnerable, and the people that we collectively care about are particularly vulnerable. And plenty of examples of vulnerable people in the US being targeted by corporates. If anyone wants a light read on this that is absolutely compelling, I would recommend Weapons of Mass Destruction, which is one of my favorite books. And it's about how algorithms are used to target the vulnerable. For example, returning veterans are sold appallingly low quality university places, and they can get government grants to do that, and that it's of absolute no value whatsoever to them, realistically speaking. The algorithms allow them to do that targeting, and there are many, many more examples in that book that I would strongly recommend. So what worries me is, as these corporates roll into developing countries, and at the moment I think it's questionable whether it is really cost effective for them to do so, because the advertising revenue from you know, from our low-income segment is you know, it's very difficult to make the business case even in the long term. But as they begin to figure that out, I am deeply worried about more than just data protection, but actually targeting of the vulnerable.
So, Tim, can I jump in here?
Yes, please. You were my
So
next
just
to call on, Greg.
Okay, just going to be quick, and I don't want to. I'm not singling out MasterCard, but I think what Salah has raised is actually the responsible sort of corporate practice. But our view at CGAP has evolved on this, and we don't believe anymore that lawyers writing more disclosure and more consent terms is going to fix the privacy. It's all good to do that, but it's not going to fix the problem ultimately. What we have come to believe more and more is that the onus should shift from consumers on privacy to corporates, and that they bear a responsibility to use the data for the benefit of their consumers. And I know that that's already often the case, but we believe it should be a legal responsibility upon the providers, because none of us, let alone a vulnerable poor person, is going to deal with their 25 different services that they use in corporates and read the disclosures and manage their. I'm not able to do that, frankly, in my life. I'm simply not able to do that. I doubt 99% of the world is able to do that. So we've got to shift the onus onto providers. And we've written a recent piece on that, and people can find that on the CGAP site. Sorry to jump out, but I think from CGAP side, I think our view on that has substantially shifted in the last year or two.
Can I just respond to that quickly? Because I don't think it's an either or. So while there is an onus for any type of provider, corporate, nonprofit, to make sure you're doing things responsibly and at the benefit of your beneficiary, your providers, I believe there's always still a responsibility to figure out how to communicate to your users most effectively and responsibly. Even if we have built-in mechanisms, or if we design, if we do product development and do privacy by design, which we do, there still has to be a confidence that the person that you're dealing with understands why they're using the solution in terms of data and what that means for them. So I'm not disagreeing, I'm just saying it's not an either or. And I think it's not only the responsible thing to do, but also, to make sure we're compliant and make sure that trust is the number one thing that's kind of been inherent, but no one's, I don't think, said the word yet, but this all comes down to trust. And I do think it's always on the provider to make sure that you're communicating that in a way, and also ensuring that you have the trust of your users. So I would just say not a but maybe an and.
And I think this is a very reasonable pivot point too, because we can talk about putting corporates, and I think we all have an image of the evil corporate, but part of this is also the local MFI. If they are going to transition to digital, then they are going to be responsible for some privacy. And it's not just what they think they're doing, right? They have to be able to protect their own data. Because it's not like most, we hear every day of these incredibly sophisticated financial services providers who get hacked and leak customer data. And as we look around the world at the MFIs who are being pushed to adopt digital practices, how are they going to possibly afford to take on those, not just, Greg, the responsibility for privacy and what they own do, but to protect all of that data that they have from bad actors who are going to be looking around for who's vulnerable. And if they can hack Chase, I'm sure they can hack a local MFI in, say, Kenya, Tamara. Again, sort of returning to Kenya as a test case, one of the things that we have seen is the MFIs struggling to adopt digital practices in the face of heavy competition from fintech native firms. Tamara, are you concerned that digital is going to just be too expensive for MFIs to migrate to, or that the competition from fintech is going to drive a lot of MFIs out of business?
I think it's important to think about the history of this. I think when a lot of the MFIs first went digital, they did it in a way where they were integrating with M-Pesa, right? The largest mobile money provider. And the consumers often liked it, right? The customers said, oh, this is great. Now I don't have to travel, or I don't have to go to this thing. So there was a transaction cost or an indirect cost that they saved because they could do that. But then they didn't always add up the numbers to figure out what are the fees I'm going to have to do, and when I cash out, how much am I going to have to pay, and all of that. Musoni, who was a digital first MFI, it's all digital money transactions, but they still relied on field officers and field meetings for client training and all of that. And so with COVID, they've had to shift and figure out, how do we do that consumer education that we used to do in person with our field officers? And they found ways to do it through Zoom, actually, and sending people bundles so they could watch these kind of training videos and things. But if we even think of some of the smaller MFI or microfinance providers in Kenya, like the financial service associations who weren't digital yet, all of a sudden they didn't have a way to collect loan repayments or to disperse savings when they weren't allowed to kind of be open. And historically, it's been pretty easy to get a pay bill number from M-Pesa, but all of a sudden it became harder because all these people were asking for it because they didn't have it in the past. And so that was a big adjustment. And I think we're going to see a lot of these kinds of growing pains for that. One thing I did just want to say is that in Kenya, the central bank very early on kind of had meetings with all the providers and got them to agree to some reductions in fees and changes in digital that I think have been pretty important and significant in Kenya. The one that maybe people have heard of is that all transactions under 1,000 shillings or around $10 are now free. And so that's enabled people to send smaller amounts of money frequently. The other thing they did is they lifted the limit off the top of that. So that it used to be a $700 limit, now you can do higher. And interestingly, they changed the limit, it's free now to move money from your bank account to mobile money. And what happened was, once that kind of barrier of that cost went away, a lot of money went from the banks into mobile money. So then in reaction, the bank service where they transfer money from bank account to bank account went free to kind of try to keep money within the banking system rather than going to this other digital mobile money thing. And so I think that we've also, there's tons of things I could share about, but I just think that this is like a natural experiment that we're all going to be able to kind of dig into for years to come to see what happens.
I mean, I absolutely agree. It's a fascinating natural experiment. I really do worry about whether the MFIs are going to exist at the end of this experiment because of the cost of the transition and maintaining two channels. Like they can't shift entirely to digital because some of their, without exclusion, they're going to have to maintain the physical channel as well. And in an environment
Kenya, I think there's been transactions. That transition's been happening for a while. I think the microfinance sector is not the same microfinance sector it was when Graham lived in Kenya many years ago, right? Mm-hmm. And so I think that this is maybe just accelerating something that maybe was already starting to happen. I know, Greg, at CGAP, you're doing a lot more looking at the microfinance sector globally.
Yeah, Salah, I'm going to come to you in a second. I want to ask Moonmoon about this point that Tamara raised. BRAC has always been about a social movement of connecting people. It's deeply embedded in so many of your programs. The idea that it's not just a BRAC to individual, but it's building up the community. And one of the concerns about digital is it starts to break that social cohesion that you're striving to build. How is BRAC thinking about integrating digital channels without losing the community development and the social cohesion piece of your work?
Okay, that's a great question. Yes, as you know, that BRAC experience with social cohesion, that's a big part of our programming. You're absolutely right. We've been doing this for more than 40 years now. But in this pandemic, of course, it wasn't possible for our clients to come together. But I think the key here was having a good balance between the human interaction as well as going digital. Because what we did was, in the beginning of the pandemic, we gave health awareness to our clients and we stopped the microfinance activities. But from May 10th onwards, we introduced branch-based digital wallets to all over Bangladesh so that our clients could repay their loan installments through that. And what we have seen that in the first week, there were about 300 clients on average paying the installment through bKash. But then in a month, it's about 30,000 clients per week paying through bKash. But as you asked, that how do we maintain this balance? We have introduced digital, but then again, we are communicating with your clients constantly over the phone. We are telling them how to navigate through this platform and telling them how to make the payments. If they can't, then speaking to their family members on doing so, helping them how to retrieve their PIN from bKash. And a lot of times what we see that 70% of our clients, they have a feature phone. So their inbox is usually full. So we have to tell them that they have to keep it empty, because if they make a transaction, they've made a payment to the BRAC wallet and they have to receive an SMS from bKash as a confirmation, right? So they have a trust in that platform that, okay, I've received an SMS. But if the inbox is full, of course, they're not receiving anything, right? So that's what we need to keep on telling them, that you have to make sure you do that. And as mentioned earlier, that we also awareing them about the fraudulent activities. So it's more of having the nice balance between social, the human interaction as well as tech. That's how we're doing it in this pandemic.
Salah, I know you have spent a very long time and a significant portion of your time now thinking about what's next, how this digital evolution is changing the provision of digital services, how it's going to affect the financial services landscape. What's the role of a company like MasterCard in that transition? some thoughts from you on, what you see happening in the pandemic and how it's shaping what comes next?
Yeah, that's a good question. I think maybe I'll start with a story, picking up on what was just said about like a mix between, the personal touch and digital. So I, in a past lifetime, not revealing my age, worked on digitizing savings groups. Actually worked with Tamara on this. Well, we used to work together, and really looked at how we connect savings groups to either mobile money or banks. Did a lot of good research. There was a lot of benefits from it. In the groups that we worked in, who saw the benefits, who were able to kind of extend the financial service to the groups, they actually wrote into their charter that they still had to meet in person. Even if people could send in money, if they could receive loans digitally, they had to meet in person. So to me, that's just a kind of a very kind of salient way of saying that I don't think digital will ever replace the need for some human touch points. And I think, to answer your question, that's kind of the way we think of it, is how can we more and more have a seamless intersection between the human interactions that need to happen and facilitating digital to help that happen. So there's a couple things we think about. We think a lot about delivery channels. And we actually work with microfinance institutions, also with savings groups, with farmers, with farmer cooperatives, even have a solution in health with community workers and in education. And in all of those, a lot of our work around digital has been how do we leverage aggregation points? So we have a touch point in the community like we talked about before that's trusted, that's usually a first adopter of technology, but that cuts down the cost of actually delivering services, which is kind of related to the second point, and I think where's next with the future of digital is multi-layered, multi-use digital solutions and getting away from point solutions. And this also goes to treating consumers holistically. The farmer that I'm trying to help get paid digitally for the maize crop that they just sold is also a parent who has to pay school fees and a parent whose child might need a vaccination. And so if we can identify that consumer once and we orient toward not storing personal information, but using technology that, you can say the person who showed up last time is the person who showed up this time, but do it in a way that I don't have to identify, acquire, and serve separately for the ag solution, the education solution, the health solution, that does wonders for access to services. So it's this aggregation of services. And maybe the last thing I'll mention in technology, maybe not obviously, most of the innovations we do are not technology innovations, but they're business model innovations. And so how we find value in the system such that someone is able to help pay for a farmer who maybe we don't want to charge, who sometimes I think adoption is fee enough, is key. And there's ways that technology can enable the distribution of value within a system, such that providers can help bear this cost and the burden is not on the end user. So, I think to sum it up, I think we're looking at it holistically. It's not a black box in the middle in terms of tech, and digital should really mimic the way that consumers are living their lives and enable multiple providers to serve communities usually that aren't served.
I think that business model is absolutely key. The microfinance, the modern microfinance movement, like its key innovation is creating this business model that enables this, being in the middle of global capital flows to, fund operations and access to the cash flows at the bottom of the pyramid. And that's where I do have a lot of concern about digital, is the disruption of that business model and the pace at which it happens, and can the industry overall keep up? Graham, I know you have a hard stop very quickly. I did want to ask you, we have spent most of our time talking about the people with phones, but there are still a lot of people who don't have phones. Moonmoon, I'm thinking about the Rohingya refugees. I'm thinking about South Sudanese refugees in Uganda. I'm thinking about displaced Venezuelans in Colombia and Peru that may have a hard time just getting basic access and maintaining access to a phone over any period of time because of security concerns. Graham, could you share just some of your thoughts on what we do about the people who are still don't have phones?
Yeah, this is a really, really good question. So let me go back to India and make another positive point about India, which is that a little heralded, because it's not very comfortable, point about the India system prior to COVID was that only about 1/5 of people actually used agents. The vast majority of people cashed their government payments out at banks or ATMs, and indeed their remittances out at banks or ATMs. With COVID, that's changed, and now over half of the cash outs are at agent points. So that's actually a significant step forward, but it leads us to the trust issue that Salah has been so rightly stressing. Having local agents is a mixed blessing. Very often they are not only the local opinion leaders, but also the local gossip mongers. Not very often they are not only the local shopkeeper, but also the person that I owe money to for having taken stock from their shops. And if I get a nice cash in, I might get it given to me net of the amount that I have borrowed. But I still, despite those problems, strongly believe that we tend to underestimate the number of people who don't have real access to phones. We hugely underestimate or overestimate the number of people that have access to smartphones. So, I mean, our industry is deeply in love with smartphones at the moment, and all that they can do, and absolutely rightfully so. But there are a very, very substantial proportion of the vulnerable populations at the base of the pyramid that just don't have smartphones. So we're going to need something that combines agent assistance and also recognizing the challenges of areas that don't have 3G coverage. I think we need a sort of differentiated agent model. And what I mean by that is that we have sales agents that offer products, a range of products and larger transactions at the market centers to which poor people go weekly or fortnightly to buy and sell. And then we need much more localized agents to do the basic transactions that can be done on a basic phone using a 2G system. Mm-hmm. But we do have to think a lot more creatively and a lot harder, I think, than we are currently doing about people that don't have access to phones and the roles that agents will play and how we ensure that those agents are trusted.
Thank you for that. Again, I know, Graham and Tamara, you have something coming up right now that you need to be at. Greg, Salah, and Moonmoon, if you can stay with us for a few more moments. In a moment, I'm going to give you guys the last word, and that's going to be a question around what's one thing that you are most encouraged by in what you see and hopeful for a positive future for financial inclusion, and what's one thing you're most worried about comes next. Now, while they're thinking about that, I don't want to spring a question like that on them without a moment to think about it. Let me let all of our attendees know what happens next. There are some great questions in the Q&A and in the chat that we haven't been able to get to. Those will be posted at financialaccess.org in a follow-up blog post, and we'll start discussing some of those and recognize those. There have been a bunch of great resources shared, and so the initial post that has resources is going to be updated with some of these additional things, as well as some other of the things that we've been talking about along the way. And this webinar has been recorded and will be posted shortly for you to sort of rewatch anything that you missed or to share with colleagues. So thank you all for attending. And with that, I'm going to turn to Greg, Salah, and Moonmoon in that order. One thing that you're hopeful and encouraged by, and one thing that you're concerned about.
So, I think the crisis has a silver lining, which is that some of the investments that countries have made in building a more responsible DFS system are starting to show their colors, and prove themselves. And I think it's also accelerating some of the needed changes that we need in countries that have perhaps not invested sufficiently before. So I think there's significant momentum for some positive outcomes of that. I will go back to my concern, which is the digital divide. And that is, I think while we might include more people, we might also raise a higher barrier in the digital divide for those who are left out. And so I think digital cuts two ways. It does allow us to reach more people, to solve all sorts of problems for them. But those people who are on the outside even more need a different kind of dual solution. And so we are left with perhaps a moat around our larger castle, bigger city state, but the getting inside it or being outside of it, it's a harder leap. And I think we have to acknowledge that the duality of this transformation that's underway.
Thank you, Greg. Tamara, you do have a few more moments, I see. So do you have one encouraging and one worrisome thing that you can share with us?
Sure. So I think the hope that I have is that we can use this opportunity to actually figure out how finance matters and change the way finance works so that it will work better for the people that we care about. My worry is that, at least in Kenya, there's just a lot of conversation around, let's get more credit to people, let's get more credit to people, people are having problems. And I'm afraid that's a short-term solution. What we need to think about is, what are the longer-term solutions to help people not only kind of maintain and be resilient, but build back in a different way, and how can finance be a part of that? Thanks.
Thank you, Tamara. Salah.
Yeah, I would say the thing that's been encouraging, or maybe the silver line, are partnerships. So public-private partnerships, but done in a way that, you know, I haven't seen before in terms of accelerating a lot of the lost in translation kind of hurdles for public and private sector partners to work together and work in a way that really brings the private sector assets to bear. Not something that's a CSR, which is very important, but, you know, tied to the business. The other type of partnerships I've also seen encouraged is fintech partnerships, like fintech with MasterCard or other big companies, and just really combining assets to solve things quickly. I think the thing that worries me is a one-size-fits-all danger. And I think that comes when you're trying to do something quick, or when you have short-term thinking. And you know, what it risks is having technology that does divide rather than unite, and understanding customer segmentation and really putting the customer you're building for first. I think we have to keep in mind, even as we try to do things quickly.
Great, thank you. And Moonmoon, last words to you.
Yes, thank you, Tim. I think the positive thing is that the silver lining in this unprecedented disaster is that we could use the digital platform, and we could bring a lot of clients in this digital platform very quickly. Like, if it was some other time, we would think for months how to do it properly, how to bring in our clients in the platform, and so many other things. But for example, the branch wallet that I talked about, we just did it in 20 days because that's what we needed at that time to serve our clients the best way possible. And the clients who are paying us now, who are getting used to the system, we're hoping that they will be in this digital platform and will be using these digital interventions in the future as well, you know, trusting the system and the convenience of it. I think what I'm worried about is that since a lot of MFIs are going to do different things in this digital space, I think having a policy would be really great for us, which we still don't have, and also working at the regulatory side with cash in, cash out limits so that we can serve our clients in the best way possible. Thank you.
Excellent. Well, let me add my thanks to Greg, Salah, and Moonmoon, and Tamara and Graham, although they've gone. I have enjoyed the conversation thoroughly. We did cover a lot of ground. I didn't get through very many of my notes because we talked about such interesting things. Thank you to all of our attendees. Please do subscribe to the Five to keep track of this, and check out financialaccess.org for follow-up materials from our conversation. Again, thank you to all, and have a great rest of your day, if it's 12 hours or 2 hours. Take care.
Thank you.
Thank you. Thank you for having us.